Well, welcome everybody to this week's edition of Market Insights. Steven Sitkowski here with you once again. Hope you are off to a great start to the week. Spent the earlier part of the day doing a little snow skiing. Um, Although the temperature got into the 40s. So I was thinking maybe we are going to go water skiing, but we're still waiting for snow in my neck of the woods. We're supposed to start getting it in about 10 days. And then my suspicion is we'll get multiple consecutive days because we are way down. And just like the stock market, everything kind of has a way of, returning back to the mean. But let's see what's going on. Quick reminder that everything that we do here is for educational purposes only. It is not intended as investment advice. So what's moving the market? Well, the market's kicked off February on an upbeat. Let me get some exact numbers for us. So the Dow was up 515 points. S&P about 0.5%, same for the NASDAQ. The Russell 2000 was up 1%, and the VIX, the volatility index, was down. It's down in the 16s, kind of back to normal. So it is amazing with government shutdown and the other things that the market's dealt with over the last week or so that here we are, resilient as always. Gold, silver, Bitcoin starting to make comebacks. How about that pullback in silver? 32%. I have a position in an ETF SLV, so I felt the full strength of that move, I can tell you. Still up in the position, but you never like giving back profits. And I have a position in BTC, which owns Bitcoin. So there's a little sting there. But does anything ever go straight up? No. Over 100 companies this week are going to be reporting out of the S&P 500. So that's roughly 20% of all S&P 500 companies. That is a definite potential to move the market. 10-year Treasury steady at 4.281. Nothing really going on with that. Ditto with oil prices. They're just kind of stuck in the low 60s, even though Iran, I think, has caused the price to move up somewhat. But there was the thought maybe it'd head back to 70. That has not been the case. Last week's heat map, not very impressive, not awful. Look at Microsoft. That was from um, negative guidance. It wasn't really negative guidance, but it wasn't the typical upbeat guidance we're accustomed to from that firm. So Microsoft, Oracle, now Palantir was down last week, but um, it reported today after the bell, and I saw where they were up 1%. So they had a beat on the top line, the bottom line, and they got a backlog due to government contracts, so they ought to be in pretty good shape. But other than this little patch over here and down here, which is healthcare, the rest of it is dominated by green. Market sector scorecard, December 31st through January 30th. Energy up 14.2%, materials 8.6, consumer staples 7.5, industrial 6.7, real estate 2.7, communication 2, consumer discretionary 1.5, S&P 1.5%, utilities 1.3, healthcare is flat, tech basically flat, financials down a bit. Stocks are looking a little pricey. So down here at the bottom, you can see equal weight S&P 500, right? That's where you give equal value to each of the 500 stocks, as opposed to what we typically do in the normal S&P, where the top 10 stocks might represent, 25% of the total market weight. You have the Russell 2000, the S&P 400 mid cap, and the SP 600 small cap. So you look to see their forward PE as a percentile rank versus history. Stocks are expensive. Equal weights 95%. S&P 500 94%. Russell 2000 94%. So I mean they're almost trading at 100% of basically their historical highs. Mid cap, there's probably some value there. They're only at 66%. Small cap, 43%. So you're starting to see a shift away from some of the large cap into the mid and small cap securities. It has been value so far this year over growth because a lot of these growth stocks have gotten really expensive. So down here at the bottom, let's look at year to date. Here's value, here's core, and here's growth. Okay. So on the large cap, value is up 4.6%, core 1.4, growth down 1.5%. Over here in the medium-sized companies, value up 4.3%, core 3.1, growth down 0.9%. And on the small caps, value is up 6.9%, core 5.4, and the growth 4%. So we have seen some sector rotation from the big boys to the little boys. Magnificent Seven performance year to date, not very impressive. Alphabet, they've done fine. They're up 4.8%. So good on them. Amazon, 3.6%. The NASDAQ is up so far. And we're early on. We got 1 month. 1.1%, S&P 1%, NVIDIA 0.6%, Tesla basically broke even, Meta down 0.2%. The big loser so far has been Microsoft. Most of that was just recent. So you can see here, when you talk about the earnings and the beats, et cetera, compared to the analyst expectation, the big winner, communication services, 100% of reporting stocks that beat earnings. Energy, 100%. Utilities, 100%. And then at 96%, technology, which is not all bad. Now you get over here to REITs, and you're down like at 25% with beats. So, it's been kind of a mixed bag, but, tech's done great, utilities have done great, energy and communication. So this week's earnings, well, we've had Palantir, and that turned out very strong. On Tuesday, we have any market movers here? I don't think so. PayPal may be reflective of the consumer. AMD is probably the biggest market mover of the group. On Wednesday, there's Alphabet. That could be a big deal. Lilly could also be significance. And on Thursday, Amazon, sometimes I feel like I keep them in business all by myself. And on Friday, nah, I don't see anything that's going to move the markets. But you can see, boy, there are a whole bunch of companies reporting. Let's take a look at the charts, see if we're still in fairly good stead. There's the SPY. That looks a little odd. Hang on. All right. Well, there's the SPX. So we can see from left to right clearly bullish. The yellow line, which is the 50-day moving average, is sloping up. Also bullish, near all-time highs. So kind of we're in a holding pattern, looking to see, can we break out, above 7,000 and hold? But we're trading above the 50-day. The MACD is pretty flat. Relative strength index, pretty flat. Steady growth on balance volume. But like I said earlier, we're just waiting. Are we going to break out and start moving higher? We have a bit of a wedge forming, indicative of a potential breakout. So time will tell. So I find that for this week, maybe we get some news about the government. I don't know. I saw where we cut a deal. The U.S. announced a trade deal with India, and tariffs are coming down immediately. So that's good. I'm not sure I see any major geopolitical headwinds right now. We've got a lot of weird stuff going on at home and demonstrations and protests but none of them seem to be impacting the market all that much. I'm sure they are impacting consumer confidence a bit, which is never great. Makes people a little bit more cautious, but we'll just kind of keep an eye on things and evaluate as we go. That's all you can do sometimes. All right, gang. Well, I hope you have a fantastic rest of the week, and I'll see you again, same time next week. Bye for now.